Hi everyone and welcome to the weekly update with me, Rich Perry, market analyst at Tech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. Now, certainly on Monday morning, the world's going on about Greece again, and this Greek debt deal that they've got agreed with the Eurozone. In terms of how they're going to play it out, it still remains to be seen because it's still provisional on the Greeks getting it through the Greek Parliament, and subsequently also the other Eurozone countries getting it through their parliaments as well. So it's not 100% guaranteed, but certainly the main crux of it is that Greece is avoiding a Grexit as we speak, and it seems to be that the situation has certainly improved. Now, the main takeaway points of this is that Greece is now having to use a €50 billion privatisation fund to help to pay for its debts. Really, it's going to get potentially even a debt reprofiling as well if it can get through the first review of the programme and how it's progressing successfully. So that debt reprofiling would potentially involve lengthening maturities and also potentially changing interest rates as well, but crucially not including a debt write-down. That is the big main factor there. Now, that doesn't help, I don't think, in my opinion. I mean, it needs to have a debt write-down. It needs to have some sort of agreement to not have to pay all its debts back. Otherwise, ultimately, it's still not really going to get out of this big hole that it's in. But still, markets have taken it relatively positively. I think to a certain extent the moves have been priced in. There's been a big cut back in the Greek 10-year bond yield from 19% down to around about 12%. That's obviously going to help. But certainly, if you look at the peripheral Eurozone bond yields, they're not actually all that much changed from Friday's closing levels. The Spanish and Italian debt yields are around about the same on the 10 years, and potentially that is suggesting that some of this move has already been priced in. And certainly if you look at the euro, for example, again the argument being potentially this move had been priced in by that. Now, we are also seeing German sovereign, the Bund yield pushing higher as well, so that does reflect a push away from the safer haven plays. Now, in terms of how this is affecting the markets, we've had obviously equity markets pushing higher on the back of this. As I said, bond markets, not massive reaction, and interestingly enough, the euro is actually lower. Also, we've seen the dollar strengthening as well, so perhaps that dollar strengthening is more sort of the market looking forward to Janet Yellen this week. So how's this all affecting the Forex markets? Well, as I said, dollar strengthening across the board pretty much, apart from cable, interestingly, but still early morning on Monday today, the dollar has been strong. Now, euro dollar is lower, but it's still just playing out, I think, this whole choppy trading conditions that we've seen in the last few weeks. No real sense of direction there. It's still trading around that 110.50 pivot level that we've still got on that euro, so no major sense of direction yet on the euro. It'll be interesting to see if that continues to play out, but still the main support that comes in is at 108.18 this week. For cable, interestingly enough, we've seen that correction, but it's starting to potentially turn around. We've seen some technical signals picking up. We've seen another strong trading day today. If it continues to close at these sort of levels, then that would be a very positive signal. Certainly looks like it could well be pushing back towards the 156.43 resistance there, so it certainly looks as though the technical signals are beginning to turn around. I think it's more of a cable playing out sort of the choppy medium to longer term outlook, but still there is a near-term improvement potentially underway on cable. Dollar yen is another one. The yen is the classic safe haven trade, and we've had the investors moving away from these safe havens, and the dollar has certainly benefited on the back of that. Pushing strongly higher, using the support on Monday at 122 figure again, and is pushing strongly higher, and it looks to be moving back towards potentially even a test of the 124.43 key resistance that is in place. Now, in the equity markets, DAX is a very interesting play again today, because we've seen the Bund yield pushing higher, we've also seen the euro under pressure. That all adds up to DAX being strong, and it looks like it's pushing higher towards the key resistance levels, potentially at 11,636 is the key June high. Now that would be a very important resistance to take out if it can. Now, the S&P 500 will be focusing much more on the banks, I think, this week. The big banks all report this week. You've got JP Morgan, you've got Goldman Sachs and Citigroup all reporting earnings, and that will be the big focus for the market. How those banks perform could well be a bit of a signal in terms of how earnings season pans out. So markets will be certainly focusing on that. In terms of the technicals, we've seen an improvement, as we have across the board on other markets, and the move above 2080 is resistance comes in, and that is be interesting to see if the 2085 level can be broken on Monday. It certainly looks like it's likely to be, and that would be your closing level. If you can close above that, 2085 is a much more positive signal on the S&P 500. FTSE, again, it's not as bullish as the other markets, but certainly it's recovering nicely. It's pushing higher back above the 6,700 level. It now needs to break above 6,870. That is the key near-term level that needs to break to suggest that it's turning far more positive once again. Now, in terms of gold, we continue to see gold playing out as a sell into strength. That all these rallies that we're seeing on gold continue to fall over, pushing lower levels. It's not a drastic sell-off. It's quite a gradual move, but still it gives you opportunities to trade it more on a short to medium-term basis than any sort of longer-term play. But still, we're seeing that drift, that negative drift, and resistance comes in around $1,170 on that gold chart. So, aside from the reaction to Greece this week, we've got a fair amount of data to focus on as well. On Tuesday, the UK comes into focus with the CPI, and also you've got the German ZEW and also US retail sales. US retail sales need to show that continued positive trend that we saw last month. That would certainly help the hawks on the committee of the Fed. Then on to Wednesday, we've got the UK unemployment data. That includes the earnings growth, the weekly earnings growth, that will be a very strong comparison to the CPI that comes the day before. Earnings growth is expected to come in at 2.9%, so that would be well ahead of the inflation rate, which is expected to come in around 0.1, maybe even flat on the year in that inflation data on Tuesday. Then Wednesday afternoon, you've also got the US industrial production data as well. So capacity utilization will again be a very interesting component of that data. Then on to Thursday, Mario Draghi and the ECB. There's no rate move expected on the ECB. However, I'm sure the market will be very much interested to know and to grill Mario Draghi on Greece further. So markets will be certainly watching that press conference with a lot of interest anyway. So, and then on Friday we've got the US CPI, which is very important, and we finish off the week with the Michigan sentiment. But probably the most important factor of the whole week will be Janet Yellen talking on Wednesday and Thursday to the houses of Congress. Now, she, in front of the House committees on financial services, she will be answering questions, and certainly considering that on Friday last week she gave indication that she was comfortable with a 2015 rate hike. The markets will be very interested to see what she says, and maybe add some sort of meat to the bones of that comment there. So lots to consider this week, lots going on US stateside, also the reaction to Greece, and also these parliamentary votes on the Eurozone deal. So I wish you good luck in your trading, probably a lot of volatility again, and I will speak to you next week. Thank you.